Hey guys, good evening. Pratheesh here. So this video is all about the trading wave indicators that we use for our daily trading activity. Okay, so you can use this indicator either on index, futures, or index options. So we have two different types of indicators. One, you can use it on futures, that is index futures, stock futures, etc. Whereas another one indicator is there that is mainly used for options chart, options based entries and exits, etc. So I'll give you a brief introduction about the indicators and how to use that for taking maximum advantage in the right direction of the markets. So let us straight away go to the indicator, and all these indicators are designed for TradingView platform. Okay, it's not mandatory that you should have a paid version of TradingView to use this actually, but the thing is that we have two indicators. So I think free plan should support minimum two indicators, and above that you can go for any higher plans. So the first indicator that we use is futures indicator. So this is a Nifty futures chart. Nifty spot chart I have taken. So you can use it on spot or chart also, no problem. So let me go to the Nifty index futures chart. So this is the Nifty index futures chart. Okay, just a minute. Okay, so futures chart, which is on a 5-minute time frame. So 30 minutes is our analysis time frame. As you know that we follow market profile or volume profile way of analyzing the markets, and so we do all our analysis based on 30-minute time frame, and we trade our entries, make our entries and exits using on a 5-minute time frame. Whether even it is for position also, we'll enter during the market hours. The position in the sense, we do not wait for the market to close by EOD or we'll take the trade as and when it happens on a lower time frame, but the stop loss, etc., we will place it on a higher time frame. Okay, so this is the first indicator. So it will have a VWAP and buy sell signals, whereas the positional alerts, okay, positional long short alerts will be there with respect to the market sentiment. Okay, so I'll explain what this indicator will have. Let us go to the settings, and this indicator basically will have a option to plot the momentum candles. So in a particular time frame, there will be so many candles. So we classify them as momentum and non-momentum candles. So if you want to see the momentum candles, you can just click onto this indicator. So you'll have a different background which you can customize. Which will show you the momentum candles of that particular time frame. So you can do it for daily time frame, weekly, monthly, and 1 hour, whatever time frame you select. The particular momentum candle will be plotted on the time frame. So if you don't want that, you can switch it off. Then you have a buy and sell signals here. Okay, so this buy and sell signals will be plotted over here. So you can see here, you're getting a buy signal, here a buy signal, here a sell signal, buy signal, etc. So all these buy and sell signals are plotted based on the price action of the candles. Okay, so based on the price action, you will get a buy and sell signals, and you are supposed to use this buy and sell signals based on the market context. Say like market is in long, so you are supposed to take only the buy signals. Okay, so use these buy signals near the supports and use these sell signals near the resistance. That is how it works more effectively. Otherwise, if you trade randomly using the buy and sell signals, you will not make money. Okay, so these signals are plotted based on price action on the time frame which you have selected. So there will be a lot of buy and sell signals, but you are supposed to use the buy and sell signals only at a based on the market context. So okay, got it. So that is being plotted over here. Then followed by, you will have the stop losses for buy and sell signals. Say like you have a buy signal plotted over here. So let me enable this. I have disabled all these things because these things create a lot of confusion in the chart. So whenever you want to use it, you can always have this line over there. Okay, so this is your stop loss line. Say like you have a buy signal over here. So say like buy signal triggered once the candle gets closed. So you are entering at the next candle open, like 24/7/24. Then your stop loss is something like 24/2/28. That is your stop loss. Okay, then another buy signal is generated. So you are trailing your stop losses. Then again, whenever you get another buy signal, you are supposed to trail your stop loss. So we keep on trailing the stop loss as and when we get a fresh buy signals. Clear? This is how it works actually. Sell signal also the same way. Sell signal also, once you get a sell signal, you take an entry and you will have a stop loss. So like this is your sell signal. Can use this as a stop loss. So like you're getting a sell signal here, you're entering on the next candle. So like your stop loss is something like this. So as and when you get a new sell signals, what happens? No, the stop loss keeps on. We are we are trailing the stop loss. So stop loss is trailed based on a unique mechanism that normal spikes during intra momentum, normal spikes will not hit your SLs. Okay, the probability is very high such that you can use the system for options buying as well as option selling. Whereas if you do it for option selling, then probability is a bit more because of the parameters involved in the options pricing. Whereas in options buying, probably the decay factor will always make the options premium to go down, and thereby there's a lesser chance for the market to the premium to hold on to that level. So that selling it works very beautifully. Got it? So this is how stop loss is trailed based on your sell levels. Similarly, just you have a profit. Sorry, this is options. So I just ignore this. Okay, so this is done. Now we have VWAP, daily VWAP. You can plot the daily VWAP on the chart. Next, we have the market profile references, IB high and IB low. So normally we use initial balance high and low for our market profile studies. So IB high and low will be plotted there. If you want, you can always use this reference line, or else this value will be there. You can see the blue color value is being printed over here, 24,345, which is nothing but the IB high. Similarly, the IB low is something like 24,240. So the values will be there on the right hand side. You can easily check it out once you practice. Otherwise, if you enable all the lines on the chart, it will be very difficult to monitor the price. So I just keep it in a transparent manner. So IB high and IB low will be there. Then IB medium, that we don't follow. IB high and low will be there. Then we have these IB extensions. Okay, normally we have 3 IB moves very often in the markets. Beyond 3 IB, the moves are not that great. So probably we have plotted only 3 IB levels. If you want, you can plot even 4 IB also. But we have restricted till 3 IB. So 3 IB levels will be plotted on both the sides. So like once IB is established, then you will get a 1.5 times IB extension, 2 IB, 3 IB, etc., etc. All these values you can have it. So there will be a white color print on your chart which shows you the 1 IB level. So here you can see 24,397 is your 1 IB levels. Sorry, 1.5 IB. This is 450 is your 2 IB. Then 24,555 is your 3 IB levels for that particular day. So for each and every day, you will get all these IB extensions on both sides. Okay, so you can easily identify how much the market moved today from that IB, whether it is a 1.5 IB move or 2 IB move or 3 IB move, that you can easily identify from looking at these levels values. So that you have included as a plot of market profile. Then we have the volume function over here. So volume in the sense we are plotting the relative volumes. Okay, so relative volumes with respect to candles. So the color of the candles will be made in a different format so that you will get to know the volumes in the particular candle. So I'm not plotting it. I'm just changing the color of the candle. So you have 3 different colors. One is your green, yellow, and red. So green indicates it's a good volume, and yellow indicates it's an average volume, and red indicates it's a very poor volume. So like when markets are giving a breakout of a resistance, you have to look for the volume support which is happens during the breakout. Okay, then average volumes, then poor volumes, very poor volumes. So you can see in the last few days, the last day's price action, what happened? The market came down on a bigger volumes. Okay, bigger volumes. Then it went up on average to low volumes. Then from there it started again coming down. Then again went up on a good volumes. So the starting and ending we had a good volumes, but in between we have the poor volumes. So for that volume identification, and this is relative volume, not based on the single candle volume. Single candle volume may be different, but we are using a relative volume to find out the failure or successful breakout with respect to volumes. Price wise, we'll have breakout, but volume is also supporting or not, we need to find out. For that, we are using this volume based indicator. Okay, that you can use. Then we have EMAs, 3 EMAs are being plotted. Okay, basically this is for trend following. If you're using EQT and all these things, you can use this as a trend following indicator. But normally on futures trades, we are not going to carry forward the biases for very longer period of time because markets are not trending as of now. Index will not be in such a case, okay, because markets will go up and go down. There may not be any trend in the near term. So we don't want to use that on a index Nifty futures. The next we'll have some positional alerts over here. So this red indicates your positional short. This is your positional long. So like when markets are in positional long, you will get an alert. So once positional long is activated, you have to look for a buying opportunity. So either you can buy the breakout or you can buy the pullback. So you have a pullback entry, which will tell you that when markets are in momentum, upside momentum, you may get an intraday dip. Okay, so that can be used to enter a positional long opportunities. Similarly, you'll have a positional short also. At the same time, when markets are changing from short to long or long to short, before changing, they can suddenly change. All of a sudden, it can go from positional short to long based on the momentum. So all these positional short, long, etc. is coded only based on the momentum. So when markets goes from long to short or short to long, most probably it will either go sideways, then it will change the trend, or else it will go immediately. It will change the trend. Whatever way, you will get an exit. Okay, either from long to short or short to long, or once you get an exit signal, then you get a opposite signal. Okay, so exit signals are marked by white color cross. So here you can see. So we are in a positional long. Okay, we are in positional long. Market went up, and so you are getting a dip. So dip, you are getting a PL. PL in the sense it's a pullback buy. So these are all pullback entries. These are all pullback entries. Then again, market started to go high. Then at one point of time, you are getting an alert. Somewhere around the last session, around 12:45, you are getting an alert to that you have to exit your long positions, because markets are giving an exit to the longs. So exit to the longs doesn't mean that you go and short the market. It's a no trade zone. Okay, you're not going to trade the market positionally, because it's in a no trade zone. Either you have to get a positional sell signal, or after a profit booking, there could be a fresh buy signal, positional buy signal. So you gave a market gave a long exit signal for you to exit your positions, wherever you bought. Okay, wherever you bought, whatever your average price, you have to exit the markets whenever you get an exit signal. Then after a while, what happens? No, you got a positional short signal. Market gave a positional short signal. Then all of a sudden, there was a big move that happened. During that last minute move. So there again, you are getting some kind of exit signal. Okay, again you are getting exit signal. So here you are getting a combination of signals, right? Pullback short as well as exit. That means when both the conditions are active, you are getting over this. So you are not supposed to take any decision when this happens. But this is a very clear indication. First indication itself, it gave you. Sorry, first indication will give you to exit your positional shorts over here. You have to exit your positional shorts over here. So if you have exited on the first warning itself, you would have avoided this kind of big opposite move against you, because you have shorted positionally somewhere around here. Immediately after a few bars, you give an exit, clean exit. After clean exit, you don't want to short the markets. At the same time, you don't want to long the markets also. Markets are neutral. Now, longs are exited. Now, again, you got a short, and shorts are exited. Now, markets are in no trade zone. So whenever you get another fresh signal, you're supposed to take an entry. Okay. So this is how it is being done. Yeah, long and short exits. So these are the things which you have it on a futures chart. Now let me go to an option chart. Okay, Nifty, say like 24,000 call option. Here I am not supposed to use this indicator. I'm used to another indicator called as options aura. So that is the indicator we use actually. Here also we'll have a VWAP. The same thing. VWAP the buy and sell signals. Okay, you'll have the same momentum candles. You can mark the momentum candles. Same buy and sell signals based on your price action. VWAP will be there. And here, in the previous futures case, we are not using any targets. Okay, you hope you have seen that you have only stop losses. We are being trailing the stop losses. Once market hits our stop losses, we are about to exit, or you are booking at a particular resistance level. So that is what we are being following in a futures trade. Whereas in options, you cannot do that, because options immediately goes to a particular level and then premium drops. Okay, so you need a proper exit mechanisms, either via profit booking level or via some targets. So we have two different levels over here. Either you can exit at a profit booking level, or you can wait for the target. So my idea is that whenever market hits your profit booking level, you have to exit 90% of the quantity, and remaining 10% of the quantity you can trade it for your targets. Because most of the time market goes to your profit booking level, and from there will be a sudden drop. Okay. Similarly, for a sell target also we have a sell signal, then we have a sell target followed by sell profit booking and a sell stop loss. So same thing here also, we'll have this positional long and short. So which options are in positionally long or short? Okay, whenever you are getting a positional long, you have to look for a buy opportunities, pullback buy. And whenever you are in a positional short, you have to look for a pullback shorts. Pullback shorts you have to add as and when the signal comes. Whenever you are getting an exit signal, exit out of that option and wait for the fresh signal to come. The same signals, but put it in a different way. Here, the stop losses, etc., is coded in a different way. Because options premiums are not as like your future. Okay, so there will be sometimes there will be linear decay there, sometimes there will be non-linear decay. So you should have a stop loss along with the profit booking and the target level. Okay, clear? So here you can see before this big move happened on a 24,000 call in the last Friday. Okay, you are getting a positional short signal when the market opens down. You're getting a positional short signal. Then you are trying to look for only sell signals. Okay, trying to look for only sell signals whenever market gives you a pullback short. So you are getting a pullback shorts. Your pullback shorts. You are getting pullback shorts followed by a sell signal. You can take a trade. Okay, short trades you can take. Okay, you go to a short trade and market all of the way they are coming down again. Your positional shorts or trade. That means markets are into a greater sell momentum. So here market got into a sell momentum. Then slowly the momentum is there, but not as great as the first bar. Momentum slowed down, so markets are going down. Then here again the sell momentum picked up. That is why again you are getting an alert here. Then all the way up, you are getting a pullback short signal. Then once the pullback shorts are active, then again you are getting that momentum is peaked out in the short side. So you take a short trade on this option. Okay, then markets are coming down. At one particular point of time, you are getting an exit signal for this option. Okay, so nowhere you would see this exit option. So right, so you can see here before this big move, this option gave you an exit signal. You can see here, this is cross indicates an option exit signal. So if you are short, you have to exit on this particular bar. Multiple warnings are there. You should exit your shorts. If not, this would have happened. This would have happened. So multiple warnings are there for you to exit your shorts. Once you get these warnings, you have to exit. Simple. Okay, so like now it's positional short. You're taking a say like you're waiting for a pullback short signal. So you're getting this pullback short signal followed by SL signal. You can take pullback shorts at anywhere, but I prefer once pullback shorts are active, you're looking for the next sell signal to enter into the position so that you can put your stop loss correctly. Say like you're getting a pullback shorts here. So you're waiting for a sell signal, you're getting a sell signal here. So I'm taking entry at around 338. Okay, now I'll activate my stop loss. That is your sell stop loss. So this is my sell stop loss. So like I'm activating my sell stop loss. So I'm taking entry here. This candle will give you my signal, and the next candle open. Like 339 will be my entry, and my SL will be 383. SL will be 383. SLs are kept in such a way that normal spikes won't hit your SL. So we don't want to keep SLs based on like 10 point, 20 point random. Stop losses are not allowed in options because we have to deal options like that, because options are not like futures, because you have to play very carefully, and that requires a decent stop losses so that you're being protected from your unwanted spikes. Got it? Say like you got a sell signal over here, you're taking an entry at 338 and your SL is somewhere around 383. Okay, you're continuing. Again, SL signal is coming, so your stop loss is slightly modified to 382. Now again, you're getting a sell signal, your stop loss is modified to 371. Like that, you can keep on trailing your SL somewhere around 352. Okay, 352 was the last trailing part. Okay, whereas you took an entry at around somewhere around 338 and 350 was your trailing stop loss. Phone is charged. Okay, now there could be a profit booking level. I told you, so as like in future, you cannot wait for the trailing stop loss to get hit because options, we cannot do that because you will miss out most of the profits. You have to lock profits at certain extent by using the profit booking level or via targets. So I will enable my profit booking level over here. So like I use a white color line to book my profits. by profit booking level. Okay, let me plot it via line. Sorry, no, this is not by profit booking, this is sell profit booking. Okay, so I just use my white color line. Say that, okay. So this is your profit booking level actually. This is your profit booking level. Okay, and you have a targets also. Okay, you have a targets also. From here, this is your targets. So markets didn't come back to your targets. Okay, markets did not come back to your targets. You are short on this option. Okay, with a 383, 339, I think 339 with a stop loss at 382. You're short. Okay, based on your fresh signals, you are trailing your stop loss and waiting for either the profit booking level to reach or your target to reach. Most probably, I will wait for my profit booking level to hit to book my profits. Then I will trail accordingly. As of now, markets are coming down. I'm getting my stop loss being trailed to somewhere around last stop loss trail happened at somewhere around here. 352. 352 was my trailing stop loss. So I sold it around 339. And all the way market came down very close to 285. So 285 at that point of time, I'm getting an exit signal for all my shorts. So whenever I get an exit signal, what happens now? I should not wait for my profit target or your profit booking level or your something like that. So that means something is changing over here on a higher time frame. So all these positional longs and shorts is based on higher time frame. That is your 30-minute time frame. So because here we are using two different time frames, 5 minutes and 30 minutes. 30 minutes time frame is coded on to your 5 minutes, because you cannot use 30-minute time frame for entry and exit. That will be too difficult for an intraday basis. So we have done this analysis on a 5-minute time frame. So whenever this 5-minute time frame is telling that there is some change that is happening on a higher time frame, so you should exit your shorts. So when market gives you an exit signal, the next bar open, you are going to exit your shorts. That is 287. You are going to exit your trade. Got it? You are not waiting for your profit booking level, or you are not your targets, or you are not waiting for your trailing stop loss to get hit, because you sold at somewhere around. Markets are telling you that you have to exit all your shorts now. This is a warning point. Warning. You have to exit your shorts. So once you have exited your shorts, you would have escaped from this spike. Got it? Or else you would have waited for your trailing stop loss to hit, it would have waited. But before trailing stop loss hit, market gave you an exit condition. If you have followed this rule correctly, you would have exited somewhere around here. That is the beauty of this indicator. Got it? So this is how the indicator works for options, especially. Okay, so we are looking at all these parameters. Either you have to wait for the targets or the profit booking level with a trailing stop losses in place. So stop losses will be slightly higher compared to normally we use. Normally we use very close stop losses on options, but here stop loss is chosen in a structured manner so that you don't get affected by multiple stop loss ends. That is the reason why we are having a proper SLs for this indicator, so that you can position size. You can size your position based on that particular level, so that you are able to say, like, it's like you are trading 1,000 lots and making 10 points. With the help of this indicator, even you are trading 500 lots and you're able to capture like 30-40 points. Okay, you are allowed to stay in the trade for a longer period of time without any stop loss ends, because you are not keeping stop losses very close to the options premium. So we have a structured way of having your stop losses. So before market giving any important reversals on a higher time frame, we are supposed to get a warning signal. So once the warning signal is market gives you the warning signal, you exit it. What is the point of holding an option that we sold from 338 all the way it came to 288? Okay, so hardly 100 points you're getting it on option. Okay, that is a very good trade. So you have to exit it. Got it? So that is how it is being done. So this is all about the indicators, and these indicators are available for subscription basis. If you want to subscribe, you can subscribe these indicators so that you can use that on your trading platform and follow the signals religiously based on the levels given over here. You can experiment with this indicator. If you have any questions, you can always email me, you can contact me. so that I'll give you proper clarifications, or any doubts are there, you can always ping me via Twitter or email. Okay. Thank you for watching. Have a nice day.